The big themes on financial markets this week have been the surging Australian dollar, the gold price, and the sudden expectation that the Reserve Bank will move up interest rates sooner rather than later. To discuss all this, I talked to Clifford Bennett from Hurston Economics. He's a super bull who picked the bottom of the market in March last year and has been on the money in forecasting the rise of the Aussie dollar and gold. Well, Clifford, do you think the Australian dollar will go to parity with the US dollar?
Yeah, the Australian dollar is certainly going to be going to parity, but the real issue, and something people have to come to grips with, is that it's going to move way beyond parity, to a range of 103 to perhaps as high as 108, 1.12 in 2012. That's our target at Hurston. And we're looking at a long-term, multi-decade shift, if you like, in the valuation of the Australian dollar vis-a-vis the US dollar. And Australian firms need to be prepared for that shift.
Why is it happening?
It's two-pronged. It's one, Australia is perhaps the next Saudi Arabia. We're going to be an incredibly wealthy country moving forward as global demand for our commodities continues to grow. And at the same time, the United States is the Western world's most mature economy, where profit margins are squeezed more than anywhere else, interest rates near zero. It's going to have high unemployment for a while, which is going to keep rates low for an extended period for perhaps another 2-3 years. So the US dollar is going to continue to weaken, and that is a good thing for the world and for Australia even, because it means that several of the global imbalances will be worked through in that way. And also it's really the rest of the world doing well that's going to rescue the US economy, and their global revenue streams for US corporations will be terrific given a weaker US dollar.
What about gold? It's been surging in the past couple of weeks, closing in on $1,300 an ounce. Do you think that it's going to go higher?
Yes, we're looking for gold, over the next 12 to 18 months to move up towards $1,450 US dollars to $1,650 US dollars. We're bullish gold, though, for positive reasons, Alan. We're not bullish gold for the fear factors of double-dip recessions or inflation or any of those sorts of things. We're very bullish gold because the two cultures in the world that value gold most highly are India and China, and they happen to be the most populous nations on Earth, and they happen to be the fastest growing nations on Earth.
So what's the best way for investors to take advantage of all that you're talking about here, the rising dollar and the rising gold price?
People who are trading the US dollar gold price, they're going to have the effect of the Australian dollar being higher, depreciating some of their profits, if you like. We've got to remember, for a gold mining company, as the gold price moves higher, it's just really icing on the cake. These companies are already highly profitable at these levels. Some of these gold companies were making money when gold was at $270 or $350 an ounce. I think the overall thrust will be higher for gold, and on that basis, some of the mining companies in Australia, the gold stocks particularly, are still undervalued.
And what about the Australian Reserve Bank? Do you think that they'll react to what's happening, the rising Australian dollar, the very strong Australian economy and the wealth that's being created here, by increasing interest rates?
The Reserve Bank's situation at the moment is, they said in their last statement that, they were aware that inflation could move above 3% and that would be a temporary effect. And all of a sudden we have this strong rhetoric about growth is, quite sound and firm, and people expecting that because growth is going to be strong or above trend, that the Reserve Bank should immediately start aggressively hiking again. I don't agree with that point of view at all. I think we can have tremendous strong growth in Australia. In fact, Hurston's forecast for 2013 for Australian GDP, in light of my bullish view as I just outlined, is for GDP to be hitting 6.5%. But at that same time, we expect inflation to still be around 3 to 3.5%. We have to realise that you can have strong growth and low inflation. That's a new concept. But I think the Reserve Bank is aware of that possibility. So I'm actually a little bit faithful that the Reserve Bank will look past the current euphoria on various economic pieces and see that it has been their stability over the last 4 meetings, at least, their stability in monetary policy that has allowed the domestic sector in Australia to again firm up and be less patchy, if you like, than it was just a few months ago. It's that stability in interest rates that Australia still needs, particularly on the domestic front, for at least another 6 months. So I'm hoping they'll stay on hold.
Are you bullish Australian equities even if Wall Street goes down?
I think, if Wall Street declines, I'm actually bullish Wall Street. I see both the Dow Jones and the Australian markets doubling in the next 3 years. But even, at some point we will detach from that US-centric view. Our economy is driven primarily by Asia. and our markets should be driven primarily by Asia as well, because that's where the fresh investment flows to this country will increasingly come from. For the moment, the psychology is still to watch the Dow Jones closely, but I think with time we will see that separation of the Australian market from the US market, as will be the case for most Asian equity markets. So I'm very bullish the Australian market with or without the Dow Jones, but a bullish Dow Jones will certainly be helpful.
Thanks, Clifford.
Thank you, Alan.